TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 10. You have the NASDAQ up 4. S&Ps are off $1. Gold contract is down $26.50 at 11.05. When Asia opened last night, it traded right down to 10.80 actually. Rejected that price and has been running around the 11.07 number for the last for the last 8 hours. Silver's down 10 cents at $14.72. You have platinum off 10 at $9.83. Light sweet crude's down 58 cents, trading at $50.31 a barrel. Bonds, we have the 10-year down 9 ticks, 125.26. 30 years off 9 at 151.26. In both cases, those bonds are pulling back with lighter volume once again. Bonds are building cause for higher price. King dollar is up 176 ticks at 98.16. King dollar is testing its swing high from May. You got the euro up 9 at 108, and the yen is up 26 at 124.35. We're going to start off with the dollar this morning. The reason being is that the correlation, of course, between the dollar and gold normally is a decent correlation. Bottom line is that they smoked gold last night on the open in Asia without the dollar but going higher. You hear all morning long the dollar's higher, that's why gold's lower. Bottom line, that's not even close. The dollar's up 156 ticks. It's testing the May 27th swing point of 98.29, and it doesn't have the juice. So I suspect what you're going to see up here, I do expect first off that it will hit the number that we're talking about. It hit 23 so far today. It's 29 that we want to see that baby hit. Now, with that being said, we go right over to the gold market first. We take a look at gold. What you'll see with gold is this, is that the price bar spread is extraordinary. When that opened, in fact, I was right in front of a computer when that opened, which was so cool. It hit 11.30, gets down to 10.80, and it had juice behind the move. It lasted there at about a tenth of a second, pops all the way up to the 1100 number. Now the real key is going to be, does it reject lower price intraday out here and get into higher price? Because the bottom line is that the correlation is certainly not of the dollar, because we know the dollar is not strong. S&Ps. Okay, so now the cash S&P. This is pretty cool watching this shakeout, folks, and this is what it is. Your cash S&P out here this morning hit 2129.39. You have two separate highs that haven't been tested in the S&P yet. You know, we'll see whether it can get up and make that test out here today. So thus far, we still have 3 lower highs, 3 lower lows inside the S&P. I suspect what we're actually going to see out here intraday is that you're going to see this market sell off slightly, and it's not going to be able to make the high that was generated on the 22nd of June, never mind the high that was generated on May 20th. That's your S&P. Dow Industrial set up the same way. There's underlying weakness in this market in an extraordinary way. Now, NASDAQ Composite, bottom line, Composite broke out. It has lighter volume, but we get a break topside, and bottom line, price is out there. So we'll see how the Composite handles this higher price, and in fact, does it want to run higher, or is it going to give it up and get back inside that lower range? Bonds. Now, the bond market continues to basically scream that money wants to go back into bonds. The question is, does it come out of equities, or is money just going into bonds so they can get their money back? The 10-year right now is trading at 125.26. The high that is generated out there, last swing high, is 127.19. I suspect it's going to make the run for that. What I actually expect is that you're going to see it make the run all the way up to the 129.31 area. So what you can expect out here today is that you can expect higher volatility, lower prices right across the board. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking to you right back here tomorrow morning, 10 o'clock.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.